Hey guys, Darren here. Thanks for joining the stock option market update for the week of January 2024. Happy New Year, everybody. In today's video, we're going to talk about what we did in the S&P 500 last week and actually for the entire year where we ended up, what's expected for next year. And we are going to touch on some of the economic data that we have and the different sectors as well and how they have performed and what's expected going forward. And then we're going to jump into the option trades on the Tastytrade option trading platform. And hey guys, I think it's super important that we understand the tools and strategies that the rich are using to get richer so that we can use those same tools and strategies and profit in any market safely. Hey, do me a favor and let's get this video out to as many people as possible. Please hit that like button and subscribe if you haven't already. And disclaimer, I'm not a financial planner. Please do your own research. If you're new or learning options, I recommend you start small. All right, guys, we started the week in the SPX, the S&P 500 at 47.54, and we ended up at 47.69. So actually pretty flat for the week. We are up around 20% year to date. We started the year at 38.24, and we are now again at the 47.69 level. So good year for the S&P, and the PEs are now pretty high though. We're above the 10-year average of 17.5. We're up around 20 now. And U.S. economic reports that we have coming out this week. We've got the Friday unemployment report, and then last week we basically didn't have too much. We had some jobless claims, jobless numbers that came out Thursday. Nothing that really affected the market too much. And then the Fed for next year is expected, you can see here in January, we're expected to still keep it at 5.25 to 5.5, but the first rate cut, it looks like it's coming in March, or there's a 72% chance, according to this CME FedWatch tool, that there's going to be a rate cut in March. So that's what the market is anticipating. And then the sectors, last week we were pretty flat, but it was low volume with the holidays, with Christmas and before New Year. So there wasn't a lot of trading. The market was a little bit choppy, but fairly flat. But you can see that most of the sectors gained. Energy was down a little bit last week. And then year to date, you can see, same thing. We've been talking about this every week, but communication, consumer discretionary, and tech are all up huge this year. So with that, let's jump into the trades that we have on the platform. And Adobe is the first one. And let's see, Adobe's at 596 price. IVR is very low right now. It's below 0, so tough to sell premium. But we have had a lot come in Adobe. Just over the last 30 days, we've made $337 in Adobe. And we started this, I believe, with an earnings trade. I like these stocks that I've got on right now, but some of them are from earnings trades like FedEx and Lennar. So we'll go through those and let you know where we are now. If earnings trades are profitable right off the bat, I usually take them off for the winners. But if not, I'll roll them to the next month or even 2 months and look to at least get back to break even and hopefully make something, which it looks like we're going to do in all of these. But Adobe, we are long. We've got puts on. It did have a drop. I did a video on this. They beat both top and bottom revenue, but the guidance was low, and that's why it dropped. And Adobe's a great stock, so that is why we're long the put spreads right now. And if we go to the curve mode and analysis, you can see we make money anywhere above this 575 range, and it's at 596 right now. We're going to be complete winners, and the extrinsic that we have is another $871 in the next 19 days. So as long as it stays above this 585 short strike, we are going to pocket another $871 on top of what we've already made so far, 337. So this will end up being a huge winner for us. Um, my long-term target, I always want to have a target range, and it's actually 680, so it's much higher for Adobe than where it's at right now. And real quick, just to give you how I go about that long-term target, I go in and I look at, maybe the 5-year, longer-term range, and then I'll actually draw trend lines and where I think it's going to go based on how the stock's performed over the long term. So if I were to do this one's a little bit tough because it has moved so much, but wow. But long term, if I go up to 680 where I have it, here's the trend line basically that I was working off of. And if you go back even further, then I use TradingView charts, and that's where I actually estimated my 680 target, but it's much higher than where it is right now, and you get the idea. Moving on to the next one, AMD. It's been pretty good for us over the last year. It's moved up outside of our range. Well, actually, it's still in our range now because I did close out last week. If you look, 30 days we made 161, but I closed out my 150, 167 and paid 435 just because there was quite a bit of risk. It was moving up. Closed it out a little bit too early. Probably should have held on to that one, but that was an extra call spread that I had on. You can see I've got 2 put spreads and right here 2 put spreads and then 2 call spreads right here. So now we're balanced and right in the middle of that range going forward. So I'm going to let this premium come in. There's 684 left in premium to come in, and like I said, we've done pretty well. 161 over 30 days. I think over the last year we've done all right. $623. So AMD's been pretty good for us, just trading iron condors because it's stayed within a range pretty much. The bank stocks, Bank of America, I've got a leaps and a call that I sold against it. So when I do leaps options, I'll often sell calls against it when the stock's up, and then as it comes down, the calls will, I'll bank that premium collected when I sell those calls. So, if I do that monthly, by the end of the year, that leaps option, maybe, I might have bought that for free based on the income that I received from the call option. So that's kind of the strategy that I use with leaps options. And I do it in lower price stocks, and B of A, you can see, is a $33 stock. So, it's not too expensive. If you go with the bigger, the Apple and Amazon, then leaps can become very expensive. Even though they're much less than buying 100 shares of the stock outright. So Bank of America is starting to come back just in the 30 days alone. We got hurt earlier in the year, but in the last 30 days, $263 that we've made. So they are starting to really come back as the economy is expected to improve this year. The 22.5, 26.5 strangle is what I have on in Chewy. And Chewy's been trading within a range. It's at 23 right now. IVR is high at 30. So good for selling premium. And my target in Chewy is about $34. It's the mid 30 range. And it's been trading between 21 and 25 recently. If we look at the chart, actually we've got the 5-year. So we want to go down to the monthly and then maybe the 30-minute, and then we can see, yeah, it's been trading. This is the monthly, so for the last half of the month between 21 and 25, and it's right in the middle of that range. So I like the position that we have on with the strangle. We've already made 181. Actually, Chile in the last 30 days, $83. Last 60 days, we've made $149. So I like Chewy within that range, and I like it long term, and we have a higher target for it. So We've still got $100 left. I'll wait a little bit longer for it to come in. As long as it doesn't get near and test my strikes, either short strike, I'll probably hang on and collect a little bit more of that $100 premium left and then roll out within the next week or two. Coin is one that was way up. It kind of skyrocketed up and straight up, you can see. So that's when I went ahead and I sold a call credit spread. When something moves up like that, I'll sell a call credit spread, and you can see in coin, we're up $63 on that trade, but we've got 148 left to go in coin. And I don't typically trade coin, but I just saw where it jumped way up. So I wanted to take advantage of that and needed some negative delta as well, because if there is a market drop, we want to have on trades going in both directions. So when there's an opportunity like this, when a stock's way up, then I like to put on the call spreads, and that's exactly what I did in Costco. Costco, I think we got in to this on an earnings trade as well, and it moved up, it rocketed up. So we just rolled out, and we were waiting for it to come in, and it has come in quite a bit. We've got $485 left to collect in premium, as long as we stay under that 675 short call strike, and we are below it at 660. And you can see that big rocket move up and now back down. And here's my 675 level that I want to stay below, and we are, it looks like we're going to stay below that. But we'll see in the next couple of weeks, and then I'll look to close that out. DraftKings is a stock I love to do leaps and poor man's covered calls, and I sell the calls against it and collect monthly premium. And you can see it moved up quite a bit. DraftKings moved up big. So we made a lot of money on the leaps, and just in the last 30 days we made $438 and we did really well over the year. 365 days, we're at 1874. So if you look, one of these leaps options, if we look at the anyone, if we go to table mode and then we look at the January, and these are the leaps that I bought, but $1,400, $1,435 for this leaps, $2,195 for the 15 right now. They were less when I purchased them, but if you look at the premium collected, we've collected $1,874. So that's basically getting this one for free, is the way I look at it. And now you own basically control of 100 shares of DraftKings stock for free. So if you have any questions about that, if it didn't make sense, let me know. But I'm actually going to do a video on that, because I think leaps are great, especially in a market that is trending up. So as the market improves, or DraftKings price increases, we make money, and it's showing a negative extrinsic because of the leaps options. But as the market moves up, we continue to make money. Any down move next week, I will probably take these off, because there's not a lot of extrinsic left in the 3 calls right here, but I'm still comfortable at the 37 and 38 strikes. So I like the range that it's in right now. 38 to 34 is the range that DraftKings trades in over the last month, and it's been great for us. FedEx, this was an earnings trade that we rolled. The put side, it dropped, and we covered the FedEx trade both before the earnings, and so check out those videos if you have questions. But exactly why we've got this trade on right now. We've got puts, and we've got calls that we've sold against it as well. So both sides and Iron Condor. We are right in the middle, I believe. Yeah, right in the middle of the trade range right now. So we're looking to turn this earnings options trade into a winner. I think overall we're going to make a couple $100, because we did lose right off the bat about 600 when we placed the trade, but then we added these options and rolled to the following January month, and we're going to end up a couple $100 winner within just 1 month based on an earnings trade that didn't go our way. But we knew our long-term strategy and we're bullish on the stock. They had their express unit sales came in lower, but they're going to, I'm sure, improve that, and the stock's rebounded and bounced right back. It moved up since earnings, but it actually had a, oh, here was the drop. So here was the drop for earnings, and then it jumped back up, and we are in the right in the middle of the trade range right now. I added a put call spread, just a small one in IWM. It's the Russell 2000, so the smaller cap stocks, and I just wanted to have it on because IVR was high. I sold a $3 wide and collected, let's see what we collected. That's $1. Yeah, $1 on a $3 wide. So basically 1/3 the width of the strikes, and we'll leave that on and kind of follow it. But I am going to be long the Russell going forward this year. It was down, or it didn't gain as much as the other sectors or the other ETFs like SPY and the larger cap and technology, the Qs last year. And I expect IWM, the small caps, to do really well in 2024. Let me know if you're trading IWM, the Russell. And sometimes a lot of people have on the pairs trade, the Russell versus NASDAQ. So long the Russell, short the NASDAQ. But I think the NASDAQ and tech is going to do well next year as well. Lennar, the home builder, this was an earnings trade that we had on. We still have it on. It didn't go wrong, but the premium just didn't come in. The IVR is still above 20. It's at 22. But we've got $600 left, and the stock has not moved. So it's still right in the middle of that range between the 145 and the 155. So I'm just going to leave these on and continue to watch premium come in $600 over the next 19 days. So you can see the delta. This is an amount of money that we should make, per day as of today, $21 per day in this trade, as long as it stays between this range in the next 19 days. So if you don't have a Lennar trade on, I would consider, I'm at my 3-lot where I go in this account. 3 lots is my max usually that I'll put on. So that's what I've got on right now. But if I didn't have any on, Lennar would be a good one. But it was an earnings trade and it's not super liquid, so that's the reason I don't trade it all the time. So I'm just trying to get out of it and be profitable on the earnings trade, which looks like we're going to be. Lockheed Martin defense stock has done well, 445, 440 put spread, and it's continued to just move up slowly. I'm looking for any downtick, and then I'll probably put on L3 Harris again, which we had on as well and took off. But just in the last 30 days, it's made 57, and 60 days 294. So I'm gonna stay long Lockheed Martin. $500 is my target. It's at 453, and IVR is still high. So I will put on another tranche probably on any down move. I like to go long when there's a down move. That gives an opportunity to get in at a lower price. Lululemon is another one. We've got an iron condor on. We've got 2 tranches, and we are right in the middle of the range. It's at 511. It's above my target. My target was 490 for the stock, but it's moved up quite a bit, and it's right at the top end. Well, it's in the middle of our range right now. And just we've done actually really well. Just in the last 60 days, we've made $700. Last 30 days, actually in the last 30 days, we've made $700 in the stock. So Lulu's done really well and right in the middle of the range. We've got another $664 to collect as long as it stays within the range. Palantir, it had moved down, it looks like on Friday, a little down to 17. We've got a 19 call on, so this is a leaps with a poor man's covered call. I believe I closed out some of the calls last week. Let's see. We've got just in the last 30 days, we've made $513 in Palantir, and it's basically been a cash machine for us with the poor man's covered calls. It trades between a range of 17 and 19 typically, and you look down here, 17, 19, and it stayed within that range pretty much over the last month, and now it's at the lower end. So that's where we want to get longer. That's probably, yeah, that's exactly the reason I'm not putting the calls on yet. I'm waiting for an up move, and then I'll sell calls against it. But I do have one in February. I closed out the January calls due to the fact that it moved down to that 17 support level. And and there's resistance at the 19 level, so that's where I put my call on. But Palantir has done great for us. Huge growth in both commercial and defense and AI software stock. Love to trade that with poor man's covered calls and leaps. SoFi, same leaps options. I don't even bother selling the calls against it typically because they don't pay much, but SoFi's done really well and came back. It's fintech bank. I think their stock can easily double. It's right in that 10 range. It's been trading, in the 6.5 to 10 range. Over the last several months, and we've done really well in it. You look just in the last 30 days, we've made $1,365, and I actually closed out because it moved up to that 10 range. So I actually sold some of my leaps and then buy some back. So any down day, I'll buy more. I want to get a few more. We've got only 8 now. I had up to 13, 14 of them, I believe. And that's each one controlling 100 shares of stock. So love SoFi going forward. SQQ is the hedge that I have. So when the stock market goes up, SQQ goes down, and when when the stock market goes down, SQQ goes up. So I just accumulate. I've got 400 shares, and it's kind of a hedge. So any down move in the market, this will go up and offset my losses in the other positions. So that's kind of why I keep that, and I actually bought the shares outright. Teladoc is another one that we have on. Good long-term, good fundamentals. We've done well over the last year. Last 30 days has been tough, it looks like, but over the last year we made $783, so done really well on that. We've got calls right now against it at the 22 and a half level, and so I like Teladoc with the leaps. Tesla, I've just got a put spread on. It had a tough week, I believe, last week, but I've got the 245, 240. I have a longer term target on Tesla, way up in the 350 range. So I believe it's a great buy right now. They've got some things going on. The self-driving FSD, full self-driving, is like a $7,500 option, and I think eventually most Teslas will have it, if not all. But right now you need to purchase it. But I think there's a tax credit that's coming next year, the first quarter. So I think Q4 earnings may not be the best, but that there's going to be better sales, I believe, in Q1 of next year when that full self-driving feature is free. So I think the Q1 results will be very good. But I just want to get a put spread. If this goes against me or I don't make money, I'll just roll to the next month and stay long. And it's just one tranche, but I'll really wait probably until Q1 or until it starts taking off before I get too much more into Tesla. Verizon is a great dividend stock. I think it's got a 7% dividend, so I've just got 100 shares of that. It's done pretty well. Wells Fargo, we talked about the banks doing well, and it's actually, I didn't get hurt over the last year too much. $280 actually made a little bit of money over the last 365 days. And with Wells, I'm doing leaps options and poor man's covered call. And then the last one that we have on is ExxonMobil. Love oil and energy going forward. They got hurt last week, and it's down to 99. IVR's at 18.9. But I've got two put spreads, one in January that I'll look to roll out probably this week, and then I've got a couple in February at the $100 level as well. So I'm going to stay long oil and roll this January into February this week. So that's it for the trades. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Use the links below for coaching and Tasty Trade option trading platform and get cash back. Share the video with a friend. Let me know any questions that you have, any comments. Let me know what you're trading. Love to hear from you. Thanks for watching. See you in the next one.